Welcome to the Innovators and Investors Podcast. I'm Kristian Marquez, founder and CEO of Finstrat Management. At Finstrat, we provide CFO-led accounting, finance, and reporting services to assist clients monetize their business. Stick around to the end of the podcast and I'll share how you can be our next guest. Now on to the show. Hello, and welcome to another episode of the Innovators and Investors Podcast. I'm your host, Kristian Marquez, founder and CEO of Finstrat Management. Super excited because today we have with us James McDowell, founding partner at Arcanum Capital. James, welcome to the podcast.
Kristian, hi. Thanks for having me on.
Our pleasure. Let's start with Arcanum. Would love to understand the firm's investment thesis.
Sure. I myself have been investing in crypto, digital assets, blockchain-related technologies, what we like to say Web3 as well, the next iteration of the internet. I started investing my own capital back in 2017. So stumbled across Bitcoin and Ethereum, and I identified that they were very exciting emerging technologies, was attracted to the aspects of decentralization and Bitcoin as a sort of alternative monetary standard, and Ethereum giving the ability to work with smart contracts. And there was the whole ICO boom, and I started to look at lower market cap opportunities in that sector. Once I understood the technology and increased appetite for taking risk and actually working with founders of projects from a very early stage. So helping them with advisory, consultancy, basically doing everything that a good VC does. So investing early and going with them on the journey from 0 to 1. So I did that, ended up co-investing with my now partners for about 3 years before we formed Arcanum. And yeah, we got good at incubating projects, really. We built a powerful network. We could make introductions to the right PR firms, the right design agencies, introduce things like validators and technical support and hire developers and all of this stuff that's involved in taking these things from 0 to 1. So fast forward to 2020, I did get some experience in asset management with a financial institution in Zurich in Switzerland, where I was living at the time. So I worked as a portfolio manager, and that really helped me gain some proper institutional experience before launching my own firm and deal with the proper service providers and make sure everything is institutional grade. So we launched Arcanum in 2020, and the thesis was the same, to invest in this emerging technology, Web3 and blockchain and digital currencies at early stages, so pre-seed, sometimes even the first check-in, and then work closely with the founders and help the project scale. So we raised about $12 million and deployed that over the space of about 6 months. There was a lot of deal flow. 2020 and 2021 was what we would say that is the last cycle before the one that we're in now. So we raised that fund towards the end of a bull run. There was a lot of capital flying around and tons of deal flow. So we could raise and deploy pretty quickly. And we put that into 44 projects, and they have all been enduring over the past 3 years now. So fast forward to we're now at the end of 2024. Some of them have died, but in venture capital, you expect that. And most of them are looking strong. So already got one that nearly hit unicorn. So we were actually the very first check-in at 30 million, and it hit 900 million on the public markets just recently. We expect it to go beyond $1 billion. So that's nice. To be the very first believers in something and take it to $1 billion valuation is a very special feeling. Yeah, that's a bit about us.
So for benefit of our audience who aren't as familiar with the crypto market, it would be great if you can give us your perspective on just Bitcoin and Ethereum in general relative to the host of dozens of other coins that are out there. What make those two unique?
Yeah, so they're still probably the sort of safe bets, and that's down to network security. So basically, the more capital that comes in and the more capital there is behind the network, securing the network, whether it's proof of work or proof of stake, the more secure it can be deemed. Okay, there's more people with vested interest. There's people all over the world running either validators or miners. And in that respect, it's all about security. The longer a network has been around and proved that it is robust, proved very sort of low downtime or no downtime, even like Bitcoin has never really gone down, So yeah, they're the safe bets. Functionality wise, they are different. So Bitcoin is akin to digital gold. It is scarce. The supply is fixed, and public companies and even nation states acquiring this as a sort of digital gold, like a hedge on the financial system. It's deemed to be very anti-fragile at this stage, and we expect it to be like a digital gold. The benefits it has over gold, you can say custody is easier, it's easier to transport, it's easier to divide, it's easier to pay with. Gold has always been money, but it's quite cumbersome. You take a gold bar in and you start shaving bits off to buy something. It's very difficult. Although it is a fantastic store of value and it is tangible, it's not quite conducive with the current digital age. And Bitcoin has a lot of firepower behind it. The mining involved is very capital intensive, and it's deemed to be very secure. So yeah, and Ethereum, on the other hand, Bitcoin is more sort of monetary based. With these decentralized technologies, there's a lot of disruption happening. You could say that Bitcoin is more like a commodity and kind of disrupting the sort of financial aspect of everything. Whereas Ethereum, there's a lot more activity happening, projects being built on Ethereum. So there was the whole ICO boom, smart contracts, tokens, a whole new way for startups to raise capital by issuing tokens. And so transactions are a little bit faster and a little bit cheaper with Ethereum. And so you could argue there's more possibilities there. But then even Ethereum gets congested. And so you've then got the birth of layer twos, so like another layer on top of Ethereum, which makes it more scalable and even cheaper transactions. And then you've got the likes of Solana, which is back down to another layer one, but is faster and cheaper. And there's a hell of a lot of activity happening on Solana now. A lot of people like to say Solana is the Ethereum killer, etc. So yeah, it's very sort of fast-paced, a lot of innovation happening, a lot to keep up with, and even new layer ones popping up all the time to attract different projects, different types of developers for different things.
And so with that, there's a lot of questions. Let's start with the 44 portfolio companies.
Yes.
What was the lens that you were looking through when you were making decisions to invest?
Yeah, so at the time, we'd seen the infrastructure boom. So Ethereum was established, and you had layer twos like Polygon appearing, and we saw a need for applications. So there's all this infrastructure, there's all this technology, but we saw a massive need and a gap for applications to be built. We also had deep ties with India, and we had touched and knew the founders of and played with the top projects coming out of India, Polygon being one of them, the Cosmos ecosystem, a lot of activity there. And so our thesis was to invest early in applications and work with experienced founders, and with India as a sort of emerging market in the sector. So yeah, we invested in a lot of Indian teams because we just saw such a good opportunity with the access we had. It outperformed the market, really. The verticals varied. There was a lot of gaming happening, Web3 gaming, and we avoided that. That felt a bit bubbly. Like there was a lot of Web3 games coming out, and we were very selective. The few that we did pick are doing very well. One of them's just got the largest grant that Aptos have ever given out. Another one, we had Ubisoft and Square Enix, the two gaming Goliaths, actually followed us into that. So gaming was one, and I'm trying to think what other verticals we had. Key sort of infrastructure and marketplaces were very popular at the time. We had the whole NFT boom, but the last 3 years has been very tough for that because it was a bubble, really, the NFT hype, and we think it will come back. But it got to the point where it was a bit silly, where there's these effectively like cartoon pictures selling for like hundreds of thousands of dollars. And yeah, that was a bit bubbly and probably will come back, but some of them have failed. Unicorn project, or soon to be, I hope, that we were the first check into, that was Puffer Finance. And they are doing what's called liquid restaking for Ethereum. So Ethereum basically changed the way that it is secured from proof of stake. Which way around is it? No, it went from proof of work to proof of stake. And then I think it's 32 Ethereum that you have to lock up in order to run a validator on Ethereum. And that sort of shut a lot of people out because there was a very high barrier to entry. And so technologies like EigenLayer came along and basically allowed anyone to be part of validating Ethereum and come together and syndicate that Ethereum, that ETH. And Puffer have made it so you can basically use any amount of ETH. It's like for the little fish that have some ETH and want to lock it up and help secure Ethereum. So that's doing very well because Ethereum is still doing great. And so, yeah, that they hit $1 billion in total value locked very quickly. I think in like the first week or two of launch. So that's doing well. There's some privacy tech in there as well. So blockchain can be used for privacy. So we have a portfolio company called Mystico, and that's like a layer one to make transactions private. Now that's often associated with like nefarious activity, but not necessarily, because if financial institutions, whether it's banks, investment banks, want to, and hedge funds want to get involved with this space, they're quite concerned with the sort of hyper transparency where all their transactions, if their wallets are identified, people can follow exactly what they're doing and they can be front run. So there are sort of technology stacks being built where you can remain compliant, like regulators and stuff can see what you're doing, but the general public or other institutions will not be able to see what's going on. So that's quite an interesting aspect as well. Trying to think what else we've got in the portfolio. Another one called Arcana, and that is all about account abstraction. So what we see in the crypto space currently is it's the barriers to entry, although in some respects they're quite low, it can be quite complicated. So the average person trying to get into crypto and set up a wallet and deal with private keys and different blockchains, it can be very daunting. And so there are companies like Arcana that are building technology where you can just log in with Google and it automatically creates a wallet for you. And you can go from there, just making the whole onboarding process a lot simpler and bridging the gap between Web 2 and Web 3. So that's a bit of a summary of the portfolio. You can go on our website and check out the whole portfolio. That's arcanum.capital.
And so I heard absolutely fascinating, all the derivative markets or verticals that are popping up or sub-markets that are popping up within the crypto space. Any geographies in particular that you find a lot of interesting tech coming out of besides India?
Yeah. Yeah, so India was great back in sort of 2020, 2021, and then it got a bit saturated and the quality dropped. Like all these speculative hype cycles, the quantity of stuff coming out goes up and the quality drops, and you step back a little bit and say, this is a bit bubbly now. We do think that India still has a hell of a lot of talent. There's so many kids going to university and want to be blockchain engineers and get into this space. But we have broadened our focus. So we're currently raising our second fund now. And we do have a much more global approach. So looking at Asia, looking at Latin America as well is going to be big. So we're looking at sort of payments and remittances, utilizing stable coins in places like Mexico, for example. And yeah, we've just secured, I'd love to be able to tell you who it is, but we've just secured a very prolific investor in the second fund.
Congratulations.
There should be a press release going out in the next week or two, but until the money hits, I can't really announce it yet. But you keep an eye out for that. It's quite big news. We're the first fund that they've ever backed, and they have a multi-billion-dollar market cap as a company. So can't really give too much more away because we're just not allowed to disclose it until the money hits the bank. But we're very close now, and the reason I brought that up is because, yeah, payments and remittances now is becoming a big thing. It's a hell of a lot easier to do foreign exchange and remittances, and institutions are getting more comfortable with crypto now. You can send millions or billions of dollars cross-border using stablecoins rather than bank wires. And there are lots of proper sort of traditional companies now forming that utilize stablecoins and can generate revenue, being the man in the middle type thing. So that's an interesting vertical we're paying close attention to. And yeah, that's one to watch.
Would love to get your perspective thinking about crypto as a currency, similar arguably to gold, as you point out. But gold, like crypto, has a carry cost in so much as expense associated with mining it, de minimis associated with servers. But historically, gold doesn't have any yield. And now, if I understand it, in the preceding quarters, or at least earlier this year, you now are seeing solutions where people are figuring out how to generate yield
Mm.
Would love to get your perspective on the development.
That is a great point and leads me on to another sort of theme that we're seeing for our second fund right now. You can actually collateralize Bitcoin or use Bitcoin to contribute to security on other chains. Basically, there's a lot of money locked away in Bitcoin and just being held there. And if you look at the two consensus mechanisms, there's proof of work, which is how Bitcoin is secured and how it is mined. But then there's proof of stake, where you have a stake in a network and you can lock that up. And if you stake that with a validator, you get governance rights, but you also help secure the network, because the more capital is locked in a network, the harder it is for a bad actor to come along and buy up the majority of the network and take control of it. So basically, all of this sort of dormant bit, there's a company called Babylon, and they are basically allowing people to stake their Bitcoin. And then there's other companies building on Babylon where you can actually use that, and you can actually provide security using your Bitcoin to other blockchains, therefore generating a yield. So that's interesting. And I think in terms of yield, there are lots and lots of proof of stake chains now. So Ethereum being one of them, Solana, Polkadot, and then there's the whole Cosmos ecosystem where every single chain is proof of stake or delegated proof of stake. And you basically lock up your tokens and you generate a yield. So that sort of opens up a whole DeFi sector, DeFi standing for decentralized finance, where you can actually own a stake in these networks. You can lock it up with a validator. The validator takes a commission because they run the infrastructure, but you actually generate a yield on your assets. And there are companies doing the same thing even for stable coins. So there are lending markets, lend and borrow markets, where people would like to borrow like a US dollar pegged stablecoin in order to maybe go long or short on these assets. So you can actually buy a stablecoin which is pegged to the dollar, and then you can lend that out at maybe 10 or even 20% a year.
Hmm.
So people are speculating using borrowed capital, but you're just simply sat in a dollar stablecoin and there's a yield there. So yeah, all sorts of possibilities.
At the time of recording, it's early February, post-election, our US presidential election. And one of the things that we're seeing in the headlines is the current or the upcoming administration is amenable to Bitcoin playing a role in the US, whether it's a strategic reserve or just more broadly within the US banking system. Would love to get your perspective on the implications.
Yeah, I think the implications are huge. We've already seen El Salvador, for example, make Bitcoin a huge part of its sort of financial strategic direction. There are a lot of fiat currencies in the world. The dollar is king, right? The dollar is a reserve currency until now. Everything else has been going down. You can look as far as, let's say, Zimbabwe, and you get hyperinflation in these countries if their monetary policy is not robust. And I can't remember who said it, but it was something along the lines of the famous quote, eventually all fiat currencies return to their rightful place, and that is at zero. Because what happens is central banks just print infinite money, and that erodes purchasing power. So if you go to work and you earn your salary and you keep that money in the bank, if it just sits there, you're not even beating inflation. Okay, so they're constantly printing more and more money. And so your purchasing power is being eroded. And you can talk about the average working person in this respect, but you can look at entire nation states are thinking that their currencies or their economies are declining, and Bitcoin can be a hedge against that. It can be a hedge against this sort of money printing. And yeah, even if you look at America, countries used to hoard gold, right? And a lot of countries over time have actually sold off their gold reserves and silver too. They don't have any precious metals. And all of a sudden, there's this sort of phenomenal digital version of a scarce asset that's backed by a lot of capital. And it's becoming too big to ignore. And so you can almost predict that there will be a sort of arms race. If America start building a strategic Bitcoin reserve, which I think they will, They probably already have, right? And they're talking about it now. Who knows how long they've been buying for? You could say Trump in his speeches says if we don't do it, China are going to do it. Who's going to control Bitcoin? And a lot of the mining activity is controlled by China, although it's officially banned. It is there. And I think he's right. The countries that embrace this technology and this sort of new financial paradigm could ultimately come out on top. And it's paying off for El Salvador. They were accumulating, I think, from like 20,000 or probably even below. And they've just been buying every single week or every month and just building a strategic reserve. And the value against their sort of fiat currency is increasing. So you could get to the stage where it's an arms race and every nation state starts to stockpile and the value goes through the roof.
In simplest terms, sounds very bullish. And
Yeah.
I have another question I'm going to ask about decentralization, and we could probably turn this into an entire separate podcast, but I have to ask. We could probably, everyone would probably agree that every government in the world would like to maintain a modicum of control over their finances. And historically, they've done so by printing their own currency. There have been exceptions. Euro is a good example, where you have a host of nations that have agreed on replacing their domestic currency with an international one. But given that Bitcoin is decentralized, how does that play into a decision to maintain a strategic reserve, knowing that it can have a detrimental impact on your existing fiat currency?
Yeah, it's a very good question. And I think ever since 2008, when Bitcoin came around, you have had the naysayers. You have had countries saying, absolutely not, we're going to ban it. And then they figure out that their populations they realize that they couldn't ban it, that people will still, because it's peer to peer, right? You can't just go to all the financial institutions and say, you can't touch this or you can't deal with this. People can transact peer to peer globally. There are no borders, Bitcoin. And so it's getting to the stage now where financial institutions like banks and even countries, they realize that they can't ignore it any longer. It's not going away. And if they just ban it, they will just fall behind. So the banks who've got BlackRock have launched an ETF now, right? This thing is not going away. And so you either embrace it or you fall behind. And if that means you lose control, then so be it.
James, it's been an awesome podcast. We got obviously a tremendous amount of insight and expertise within the space. Before we wrap up, we'd just love to get your perspective on what you think is ahead for the crypto and Web3 space over the next 4 years.
Yeah, so over the next 4 years, I really feel like we are back. It's been a tough bear market. So ever since the bubble popped again in 2021, it's been tough. Our portfolio companies have had to be sensible with the treasuries, the capital that they raised. They've had to cut costs. They've had to build quietly through this bear market. Liquidity has just been sucked out of the market. It's either given up or you had FTX go bust, and we've been through hell, honestly, over the past 3 to 4 years. But the bottom is in. We now see Bitcoin at an all-time high. Time of recording, we've just hit $80,000 per Bitcoin for the first time. And that is a sign of things to come now. So what always happens is Bitcoin leads the way, right? Bitcoin is king. Liquidity flows into Bitcoin, and then people start to go more risk on and more speculative. So Bitcoin pumps, and then the larger caps like Ethereum, like Solana, they will start to go. And then people are looking for greater returns, and it trickles down and down. So you get large caps go, then mid caps go, then small caps go. So we've just seen Bitcoin hit an all-time high. We're probably about halfway through this cycle, I would say, heading towards a big blow off top. So the next 6 months are going to get very interesting. I would say there is still value in buying and holding Bitcoin, buying and holding Ethereum, buying and holding Solana. I can see easily Ethereum hitting 10K, Bitcoin 100, 150 maybe. Could go higher. You never know with these speculative bubbles how high things will go. Often it blows off higher than you think, but there'll always be people calling higher and they won't quite get there.
Sure.
But yeah, I think realistic targets for this cycle, Bitcoin 100, 150K, Ethereum probably 10K plus, Solana could go to 600, 700. So you're looking at sort of 2-3x multiples for the larger caps. It's not going to be as crazy as 2017 when far less people had heard of these things and they were going 20x, 30x, 50x. It was nuts. But the market caps were much lower. So now you look at Bitcoin, it's already over $1 trillion market cap. You can't really get 20x. It's not there. Same with Ethereum. It's already extremely high in terms of the market cap and the fully diluted valuation. But that said, there are other opportunities, right? So there are other layer ones that are up and coming. They argue that they're more scalable and more user-friendly, and they might be sitting at, I don't know, $50 million valuation, for example. You've got applications that might have their own blockchain sitting at maybe $10 or $20 million valuation now. And these can all go to $1 billion plus. I would say if you dip your toe and you want to hold some Bitcoin, treat it like a savings account, look into Ethereum and that technology, look into the newer ones like Solana, things that are more scalable and deemed to be a bit more technologically advanced and user-friendly. And then look into the lower market cap opportunities. There are literally thousands of projects out there with strong founders. Honestly, some of the smartest founders in the world, tech founders, are in crypto right now. And they see this as bigger than the internet. So that the two biggest things right now are crypto and Web3 and AI. And that there's actually a convergence between crypto and AI. So if you think about artificial intelligence and machines powered by artificial intelligence and payments, digital payments and crypto are definitely the future. And so they're inextricably linked. And so there's a huge opportunity at the intersection of AI and blockchain. So that's one of our themes for our second fund as well. So to answer your question, tons more innovation, tons of price appreciation, and lots of opportunity to invest in high quality projects at pretty reasonable valuations now. I don't see it as we're at the top of a bubble now. I feel like we're, like I say, probably halfway through this cycle with a lot of upside to come over the next 6 to 12 months.
Fantastic. James, if there are any founders, co-investors, limited partners who would like to get in touch with you, how can they find you?
Yeah, so you can just email me direct. My email address is jm@arcanum.capital. You can check out our website, .capital. You can check out the Fund 1 portfolio. You can check out the Fund 2 and the themes and the terms and everything there. And you can follow us on X. I think it's @Arcanum Capital, just all one word.
Fantastic. James, thank you so much. Genuinely appreciate your time. Your perspective is fantastic. And I know our audience is going to really have enjoyed this podcast.
Thank you, Kristian. Again. It's been great to be on. Thanks for having me.
Kristian Marquez here. Thank you so much for listening to the Innovators and Investors Podcast. If you're a successful founder or an investor who would like to be on the podcast, please visit podcast.finstratmgmt.com/podcast-guest. If you've got something out of this interview, please share this episode on social media. If you know someone that would be a great guest, please tag them on social media to let them know about the show and include the hashtag Innovators and Investors. I'd love to see your posts and suggestions. We're regularly putting out new episodes and content. To make sure you catch each new episode, please subscribe to the Innovators and Investors Podcast. And your thumbs up, ratings, and reviews go a long way to help promote the show, and it means a lot to me and my team. Would you like to know more? Go to our website, finstratmgmt.com, or follow us on LinkedIn or on X. Our handle is @finstratmgmt. This is Kristian Marquez. Thank you for listening. Until next time.